Today, looking at dollar falling to key support levels. Very interesting, very muted FX movements. I mean, the past 3 days we've had daily changes in the euro dollar, the most popular spot FX pair to trade, of only 20 pips or so. Very muted, but we are sitting right at that 116 price level, which, as psychologically important it is, that's contested. But if you zoom into an hourly chart, a 1 hour, you can see that we have tried this a couple times here in recent trade. Yesterday rejected, early this morning rejected, and now looks like we're marching back up to it. So I know Jamal's talked about this before. Looking at these levels, only important in so that these could be clusters of orders and of added attention among traders around the globe. And so we'll see if during this U.S. session, U.S. traders take this through 116, but not only this euro-dollar market that's falling to this level, also looking at dollar CAD staying stable right above 140. This one has hovered ever so slightly above. Oh, just broke it. There you go. For the first time this morning, but really tight trading range there. We'll see if that holds or if this breaking through this level reveals a whole new trading range. And that's the kind of impetus, the most exciting and actionable takeaway from looking at some of these price levels is it might be a wait and see right now for a trade, a possible trade idea or what markets to look at and take action in. It might be nothing right now, but as we have the federal government opening back up, I think it's interesting that we're having a little bit of a dollar slide, perhaps in anticipation of some positioning in front of some data volatility. Because the few and far between data we have gotten, now most recently, speaking towards maybe a teetering job market and Fed rate cut in December, still the highest speculation event. And if you think about it, heading into these events, it's not till December, but when we get to the event, we are most likely going to be 90-10 in terms of probability of cut or no cut. And markets won't be as surprised at that point. So what that means is you have, right now, we're sitting at 2/3 probability of a cut, 1/3 probability that we stay where we are. So you have at least 33%, or conservatively 22%, looking at these futures markets, of pricing that can be inflated or taken out completely ahead of that December meeting. So even though the volatility isn't here right now, it's going to be there sometime in the next month. And what catalyst that is exactly, who knows? But we do know that with the government reopening, we will start to get some of that data flow back. And so perhaps there's some positioning in anticipation of that. Perhaps some traders and investors thinking there's some asymmetry there in terms of risk and reward to get ahead of some of those data points. But it will be, I think, a positive overall to get more data points in the door for FX traders and, just global market participants that have had this hole for the past 40 some odd days. But those are some of the pairs I'm watching most closely. Australian dollar, US dollar also has an interesting resistance right at 65.5 cents. That, similar to euro dollar, has tried it a couple times, not moving as much as historic correlations would suggest with gold. A real rocket of a move throughout the U.S. session today in gold markets. Not so much in this Australian dollar market as you might have expected a similar price action, as some of the risk sentiment, kind of teeters in terms of U.S. equities. The China story a bit dead now. But if you aren't looking for, U.S. rate speculation play necessarily. The dollar pairs that are not playing along with this congestion, resistance, support storyline. We have dollar yen looking at another key level at 155, but now rejected pretty strong off it today. If you zoom into the hourly on this one, you'll see that we are at highs dating back to February, or we were early this morning, just breaching 155. This is especially interesting because we had some commentary from BOJ officials saying they're looking at 155 as well, given the rapid decline in the yen, at a possible space for intervention on their end to try and send this yen a bit higher and not let it drift too far. Maybe there was some intervention this morning. The price action doesn't look like anything drastic or immediate. Looks like a natural kind of rejection off this level. But if we press up and through it overnight, if you're trading this pair, it is definitely kind of a ad hoc event risk to keep track of. But yen weakening across the board, euro yen at an all-time high as well. And then lastly, looking at that dollar Swiss franc, this one that has moved very much in line with euro dollar as of late, not necessarily playing the same congestion game that the euro dollars had, as it's traded completely through that 0.8 level, and now we're back after a pretty substantial move from 81 just a few days ago last week. This one drifting a lot more consistently than a lot of these other major US dollar pairs. So the next kind of price levels to look for a stall would be around that 79 Swiss franc level. But this presents a pretty nice trading range, actually. One of the only ones that we're trading, kind of through these ranges as opposed to stuttering at one end or another. But that's what I'm looking at early this week, I guess midweek, as the U.S. government reopens.